Australians who sell residential properties are achieving record profits, according to the latest Pain and Gain report from CoreLogic. The median profit achieved by Australian vendors was $306,000 in the December quarter of 2024. Now that's the highest nominal gain recorded since the dataset began in the mid-1990s. But behind the headline figure lies a more nuanced story, one where detached houses continue to deliver while units in some markets are less prosperous. The report analysed 95,300 resales nationally over the quarter, with 95% of sellers booking a profit. That means that they sold for more than they had bought whenever they bought years ago. For those 5% of resales that didn't make a profit, the median loss for unprofitable sales rising to $45,000, up from $40,000 in the prior quarter and well above the 5-year average. But still, the nominal gains from resale reached a whopping total of $35.6 billion in the December quarter, a little higher than the quarter before. Now, as always, the devil is in the detail. Brisbane led the capitals with an astonishing 99.6% of resales achieving a profit. But Melbourne and Darwin lagged, with just 89% of Melbourne resales making a profit and just 72% of Darwin sellers turning a gain, respectively. And the biggest culprit? Well, it's primarily units in Sydney and Melbourne. Those two cities alone accounted for 60% of all loss-making resales nationally, despite representing only 34% of total sales. Interestingly, over a third of loss-making sales in that quarter had held periods of just 4 years or less. 1 in 4 were sold within 2 to 4 years of purchase. And CoreLogic commented, short selling times can increase the risk of making a loss, particularly if you bought at the peak of a cycle and been forced to sell before values have rebounded. Yes, our profits are strong on paper, but not everyone's winning. Unit investors in oversupplied markets, especially those who bought off the plan in the past, are still paying the price for speculative decisions made a decade ago. And as always, property rewards the patient. Short hold periods, volatile lending policy, and poor asset selection will often be punished by the market.